Announced. We have some thoughts on the market now from David Brochu of Strategic Point Investment in Providence. Is that a record high close for gold, by the way, or near record high close?
It's what we call a nominal record high, meaning non-inflation adjusted. Yes, it is. On an inflation adjusted basis, we'd have to be up over around 2,500. But when you started buying gold a little while ago, it worked out pretty well. We think that will continue for a considerable period longer.
Really? And you can get that, of course, through gold mutual funds, a lot of other ways to buy it.
Yeah, the most direct way is through an ETF called GLD. And it actually buys gold and stores it for each share. I have some concerns there because it's become the 5th largest holder of gold in the world. But it is the most direct way other than buying gold in an account and trading it.
When you say ETF, you mean, I think, exchange-traded funds?
Exchange-traded fund, right.
And what is the outlook for them nowadays? A couple of years ago, that was the wonderful new way to invest in these exchange-traded funds, but I think they've lost some of their, pardon the pun, in the gold sense, luster.
Actually, they're doing pretty well. I think it depends on which ones you look at. They've gotten carried away. Wall Street is able to ruin just about any good idea. So the good ones are solid, low-cost index funds, work really, really well. The new actively managed leveraged positions, they have a lot of problems with them, and I'd kind of stay away from those. But the general S&P 500, Dow Jones, the gold positions, things that are very straightforward, work very nicely.
Boy, you're right when you say Wall Street can ruin just about
anything.
Just about any good thing.
Just about anything.
We're not talking about your level. We're talking about these bums in New York that walk away huge bonuses after the stocks go down so much. What hasn't been ruined yet? What are you suggesting for your clients?
Well, the interesting thing is the entire economy is being ruined as we speak, but that means everything's going up. The Federal Reserve is keeping interest rates very, very low. They're likely to continue to do that for a very long time, and that means just about everything is going to continue to increase in value. It's false, but that's okay. As long as you get out before it goes down, you'll be a happy camper. The problem is that it's crushing our dollar, and at some point the dollar's decline is going to drive interest rates up, and we are going to end up with stagflation, very similar to what we had in the 70s. Unless something changes, within the next 24 months, you'll be looking at higher interest rates, higher inflation, and low growth. So be very careful.
And in the 70s, those interest rates went up to like 17, 18%. Now, and you're not suggesting they'll go that high, do you?
No, I don't think they'll go that high, but they started at a higher base that time. It's never the actual total height of the interest rate, it's the velocity of change, how quickly we go from one number to another. So going from 0 to 5 would be much worse than going from 7 to 15, simply because the velocity of change is so incredibly great.
So what are you telling your clients?
Well, what we're doing is we're buying gold, we're buying commodities, we're also buying equities. We are buying the S&P. We're being very, very careful and looking for signs that the Fed is finished. And those signs, we believe, will be bank lending. When banks have started to lend, they will have had accumulated enough reserves that they won't buy treasuries anymore. And when that happens, interest rates will go up. We don't know when it will be, but it is going to happen at some point.
It's a very defensive strategy that you...
Has to be.
Yeah.
You can buy a lot of things and make money right now. That's not the problem. The problem is that it's going to end, and it will end badly. We just don't know when. So you have to be very, very careful. Foreign assets look better as well because the dollar is declining. You make money even if the asset itself doesn't do very well. So you need to be careful.
Yeah, and we thank you for your guidance, David. David Brochu, Strategic Point Investment in Providence, with our business report for this day. 19 minutes after 6 o'clock now.